Hello again. I'm Harpreet Kaur, founder and CEO of GICF Group. Today we will talk about type of funds available if you should finance your company, outside funding I'm talking about, or not. If yes, are you finance ready? Yes. So first thing, how many types of funds are there? What are their purposes? And when you should go for which one? Number one is your private equity, venture capitalist. The fund would be called as venture capital, bank loan, debt funding, seed capital or angel investment. These are the major headings. That is something you need to understand as the environment, the financing environment for your business. There are more funds, but we will not go into those details. First is your private equity. Private equity funding is when someone brings in the money and shares your loss and profit equally. So you both are taking the risk together. Venture capital is, in private equity, it can be a business startup or established business. That is the choice of the private equity investor. Second is your venture capital. Venture capital is, as the name suggests, capital for the venture. So you have an existing venture or you want to build one, but the venture is going to be together with your VC and yourself. PE funding and VC funding, though technically they can be for the startups or a valid concept, but they are definitely interested in already profitable business, or at least the proof or the evidence of the business success is established. Next is the bank loans. We all know about it. You prepare those documents, the fields where bank wants to give you the funding. It can be on the CC basis, that is a credit thing, your overdraft basis, or a direct loan you are taking. And in these fundings, there is a fixed rate of interest that you have to pay. Now, it can be that you have EMIs, that means you are paying back the principal amount as well, or maybe you are not. So it depends on your relationship with the bank, your application, and the approvals. Then is debt funding. Banking is also the debt thing. Also, you can go for a private debt. That is, you raise the money from outside, maybe from an individual, institution, or either ways. It can be your friends, it can be professionals, but over here again, your rate of interest and your principal amount is fixed. So whatever may happen to your business, loss is your, profit is your, but you have to pay back the agreed ROI and the principal amount back to the investor. Then is your seed capital and angel investment. What are they? Seed capital is when even you don't know if it is a business or it is not a business. You're working on a concept. It can be invention, innovation, business idea, something, society, you think the society requires. It can be, a lot of things. But it is that point, it's a seed, as the name suggests. It's a seed. When you have to plant a seed, you don't know if you will have a sapling or not, but definitely you do your calculations. So it's the person who is also coming up will prefer to take a zero risk. Factor of risk is there, but it is a zero risk. So said that seed capital or angel investment is when you are starting something. It can be research and development, business idea, as I said, a lot of things. But starting from the point, this investor is going to be with you. It is also called as angel investment, and there are other elements also among them. So this is the first thing. How many sorts of funds are available? So which category your business or your idea falls, you can go for the further things. maybe you can study more, you can go to the institutions, you can go to the pool, you can go to the groups where these funds are available. But if you should go or you should not go is the second point of conversation for this video. Understand, the funds are not going to make your business successful. It is always you, your business idea, and implementation. That is a success factor for the business. If you are raising finances, you're definitely giving away a chunk of the business. Because if you are not, or if the other person is not benefiting from it, nobody will invest, right? So, understand, is there a possibility that you can utilize your own funds, start a business, and create a self-revenue generating model, reach a level? If yes, you should definitely go for it. Because you are saving the money, the return on investment that you might have given outside. So what you are doing is, you are becoming your own financer, you are getting the business profit as well as the return on investment that would have gone outside. So you have more money for yourself, you have more money for your business, and you have more freedom, independence, if that is what your business requires. And when you should go for financing is, if your business model is very successful, you are sure about it, it is capital intensive, that means if you put in more capital, you will have more returns. Definitely you should go for financing. In that case, you really have to understand, what does financer wants? It's not only what you want. You understand that what kind of type of fund you want, and yes, your business requires funding, that's all right. But now, are you finance ready? That's a crucial point. What are the elements to see that? 1. Have you created, maybe technology-wise or team-wise, your own replacement? Or you are the only person who is going to run your business? If you are the only person who is going to run the business, if you are not there, finances are going to be in a soup, they're definitely not going for it. The first element, are you replaceable? 2, is your business scalable? I'm investing the money, I'm going to get a fixed rate of return I can get from FDRs or maybe other resources where I don't have any risk or I have a control. But if I'm investing in your business, is it really scalable? What is the growth factor? Be sure you know it and you deliver it as well to the investor. Point number 3. What is the use of technology into it? At present, most businesses have to be artificial intelligence and machine language based. The technology has to be in place. So is your technology in place? Is user, visitor able to use your services and it is easily understandable? If yes, you have put a right on this third point. Next point is data bank. Is your business or the application you have created is able to create a database of the people, that how many people are interested in your product? And when I say how many, the investor is looking for at least a number of 1 million. If it is more than that, that is beautiful. Also, are these people, which is also the next point, are active users, your daily active users, your weekly active users, your monthly active users? After the data bank, are you able to engage them? So next point is engagement. Do you have something in your business that people are interested in it? Because if they are active users, they are interested in it, they will buy. And when we talk about the online conversions, it can be more than 50%. So we are not going for the conventional marketing, formulas. So what you are talking about is, you are digitally present, you're online available, you have engagements, you have database, there is technology which can replace you. Beautiful. Last but not the least, is it something that you have already created the complete structure? That's all? Or is it something your business had 10 modules, you have created 2, you went to the investor, explained them these 2 and showed there are 8 more steps to grow? If yes, you are definitely an investor magnet. If you are an investor magnet, you will attract funding, and if your business requires financing, it's a win-win situation for both of you. I'm sure you have understood what kind of funds are there, if you should go for fundraising or no, rather financing or no, and if yes, what your investor or a financer looks into you. Be ready before you approach them. Good luck for your business. I'm sure your business will be successful if you implement these points. If you require customized consulting, do reach me. I'm Harpreet Kaur, founder and CEO of GICF Group. Thank you.